Well, one stock that was getting attention in yesterday's trading session was Canaccord Genuity, an analyst with a bullish call on the Bay Street firm for a few reasons. Recently, Canaccord came out with their quarterly results, and the analyst team at TD Cowen noting that there is a focus on cost controls, but additionally, a pickup in capital markets activity and perhaps the largest part of that story, the continued growth in their assets tied to their wealth business. Dan Daviau is the chairman and CEO of Canaccord Genuity, joins us now. Dan, nice to have you back with us.
Don, love to be here.
So you guys recently had your quarterly results, and those three factors I think that Bay Street is noting with the business are certainly things that we saw in the actual financial performance. I guess let's start with the capital market side, just because
okay.
We're sitting here, stock markets at all-time highs. CEOs have been talking on conference calls about their mood surrounding doing activity, how they're navigating the trade story. What have you been hearing from your clients about being active, and how is that influencing your business?
Yeah, no, great question. And certainly the environment has changed. And you can see it here. I'm doing this call today from Boston. That's our global growth conference right now. We've got 2,500 people in the middle of summer. That gives you a pretty good sense on how people feel about growth equity. So things are definitely picking up, getting more active. We'll see how they play out into September. The markets, as you've indicated, John, have been strong. We mentioned the TSX up 13%, but if you look at the small cap index, that's up 30%. And you look at, that's true in Canada and the US. So we've seen a pretty good recovery out here, and that's bolstering a lot of confidence for CEOs, both in terms of equity raising, but also in terms of, potentially doing strategic transactions. And you're seeing that pick up just based on your news story.
Yeah. And, I think one thing people have been curious about in the Canadian market, I know you operate around the world, but whether we would see more IPO activity. I heard you recently say that the market is not fully open. Maybe you could sort of talk a little bit about what you've been seeing on that front, new companies coming to market.
Yeah, and I don't want to I'll give a quick answer to a really tough question, but you see a broader market recovery, then you see a small cap recovery, and then you see an IPO recovery. That's generally the trend that you see. So we've seen a large cap market recovery. We've seen the small caps getting better. The next thing I would expect is an IPO recovery. Those are more illiquid. They take more time. But I'm confident that in September, and if you speak to my competition or some of the companies out there, a lot of people are going to test the market, I think, in the next 3 or 4 months.
Now, when you've got that, we're going to talk about the wealth business in a second, which is almost that more stable force in the business. But when you're trying to be, let's say, actionable in the face of not knowing when the next IPO is going to come or what have you, I heard you talk recently about sharpening the focus of your capital markets team. What are some of the areas that you've been leaning into where there's some pretty reliable business to be going after right now?
Yeah, we tend to focus on those entrepreneurial areas of the marketplace that need capital in good times and bad. So we're the #1 mining investment bank in the country. That was 50% of our revenues in our capital markets business in Canada last quarter, probably 90% of our revenues in our Australia business. It continues to be active. That gold sector and precious metal sector continues to be very active. You've seen what's happened to gold prices. That's been an important focus. Technology is an important focus of ours. Sustainability is an important focus, and healthcare. That's what we tend to do. We operate in broad other segments, but in those 4 segments, we definitely operate globally and in a coordinated fashion.
Okay, and then let's talk a little bit more about the wealth business that's been one of the consistent focuses of growth for Canaccord. And we continue to see that in terms of the overall assets that you guys are representing in wealth. Can you give us an update on what the strategy is at this stage of the game?
Yeah, sure. We're up to $125 billion in assets globally. That's a record for us. We had record revenues in the UK. We had record revenues in our Australian business. Our Canadian business had a fantastic quarter. In Canada, we continue to attract some of the best teams from some of the bank-owned platforms and some of the other independent platforms. Our assets in Canada are $45 billion now. Our assets per advisor are over $300 million. these are all very telltale signs, and there's an immense amount of growth still left in the Canadian wealth business, and we're very excited by it. Our UK wealth business, we've done a number of acquisitions. We're looking at integrating those in. There's more acquisitions that we could do. That's worked out well. And Australia, we started at $1 billion. We're up to $10 billion in assets in that business. So there's immense growth in wealth. And John, as you pointed out, it's a stable, relatively stable business. I can tell you what our wealth revenue is going to be next quarter and not get it that wrong. Capital markets, of course, is more volatile and depends on, the Trump tweet of the day.
Right. And this isn't, in a lot of ways, it is a story about people, obviously the customers of these wealth advisors, but there's a lot of wealth advisors that join us here on BNN Bloomberg, and, the ones that might join your team, who weren't on your team. Obviously people are thinking about what's the best approach for their book of business over the long term. And so there's obviously, if they come to Canaccord, there's the opportunities that Canaccord can afford. One thing I've heard from the industry more broadly speaking recently, though, is what ultimately will the role of these advisors be as AI takes a larger piece of the societal story, and whether that just means that they are, the supporter of their client, the coach of their client, whether they have to just sort of shift what the focus is for the customer. But how are you guys thinking about how AI starts to change that relationship, if at all?
Yeah, we're obviously on top of it, and we continue to think about AI and how to deploy it in our business and in our wealth business in particular. And right now, it's such a great tool for identifying customers' needs and what they're doing. You can see how their portfolio is doing. You can see how often they're accessing their portfolio. It gives our advisors indications of when to speak to their clients and how to speak to their clients. So it's a great tool. Will it ever take over the investment process? The investment decision process? I doubt it, and it will never take over the human interaction. At the end of the day, you're entrusting someone and you're deploying a lot of capital with that person, and you're going to want that personal touch. I'm sure there's platforms, low-cost discount platforms where AI could take over, but in the full-service wealth business, that $2 trillion business in Canada, of which we're $45 billion. It's not going to take over that part of the business, I don't believe. Okay. It's an important tool, and we're going to continue to use it. All
right. Before we let you go, we were talking about the stock market. Let's talk about your stock. And we mentioned there was some bullish commentary from one analyst yesterday who thinks that the shares could be higher than where they are today. But you have a sizable amount of the stock held by people like yourself, by the board, by the employees. I think it's kind of nearing almost half the float. Correct. Is that correct?
Yeah, it's about 47% of the stock is held by the employees and the insiders of the company, and that's part of the board's strategy and part of my strategy. We want our employees to be significant long-term participants in the success of our company, and we want that it perfectly aligns with our other shareholders. We want everyone motivated the same way about what's the best thing for the company over the long term. So we've got an active program in place to increase share ownership by employees. It's working. We have an employee trust now that owns 14% of the business, which is fantastic. That's incremental ownership. And it's working out really well. And to the point that analysts are making, the scarcity of a very valuable, highly respected wealth asset like our own is becoming obvious. You've seen transactions in Canada, Burgundy and Richardson be sold. Richardson was one of our few independent competitors out there. The UK, the value of UK wealth assets is well recognized, and there's lots of transactions in that space. So I think the market's finally catching up to a strategy we've been deploying for the last 7 years, which is materially increasing our wealth assets. Like in the last 5 years, we've over doubled our revenue, doubled our assets, doubled our net income. So we've materially increased that business, and we're going to continue to do that. Nothing's changed in the dynamics that will affect that strategy.
Okay, Dan, appreciate the time. We'll let you get back to the conference. Thanks a lot.
Thank you very much, John.
Dan Daviau is the chairman and CEO of Canaccord Genuity.